Right, here we go. Backtesting. Something that I don't generally do, and I don't advocate that backtesting is the reason why I got profitable in trading. It really isn't. It doesn't come close. And when I did test, I didn't test in the most conventional way like you might be used to seeing, which is getting a spreadsheet, logging loads of data down until my eyes literally can't function anymore. I don't agree with that. I think it's not the most convenient way, not the most effective way to backtest. I'm gonna walk you through in this video how I do backtest, how I've always backtested and refined over time, obviously. And it's very simple. It really, really is super simple. People overcomplicate it because they get a dopamine hit when they backtest, number one. And number two as well, point that I want to make, this video has been requested quite a lot because I've made so many videos talking about trading advice, trading tips and these kind of things, but very few of you actually know how I trade. You can't obviously figure that out based off of one video. It's not the purpose of this video. But I'm going to be going deep in this. I'm not going to be holding back in terms of information. A lot of what I say might be foreign to you. It might be alien to you. In this video, the purpose is not for me to give you a tutorial. Please understand that. There might be a lot of confusion, a lot of questions, that's fine. But this isn't an education channel of mine. This is a personal channel. So when I'm testing Pound Aussie, there's going to be a lot of things that I talk about with regards to price action that you may not understand. But this video is not for me to explain those concepts. And I'm using TradeZella's feature here today. All right, big shout out to TradeZella. I'm not affiliated with TradeZella, but I've been using their journaling software for the past 8-9 months. It's fantastic, it's brilliant. Really is an amazing tool. And also the backtesting feature that they've got that I believe they're also developing is phenomenal as to what it can allow you to do in terms of live P&L, all that kind of stuff. I've got a 200K account here that I'm starting with. Reason being is because I wanted to use some decent size of capital. I mean, 100K is good, but 200 to 250,000 anyway past that is where I would say the money starts to get sizable enough where you can take it a little bit more serious. I'm not saying you shouldn't before that, no way at all. I'm definitely advocating for that. Let's get into it. These are a few positions that I've roughed out previously in this run. So I've started this from December 2023. So I want to get into all of 2024's data. Hence why I've started it at the end of December 2023. So let me just explain something here very briefly. Look at the price action, first and foremost. I always like to build a story from the left, because if you don't understand what's happened, it's very difficult to gauge what will happen and what price is behaving like just to get an idea of it. It's what we call price nature. So have a look at this flat consolidation, what started as a flat consolidation, then broke out over here, got people caught, and then obviously sold off. Now, I'm looking to see, was there any entries after that? 1 second, on the 4 hour, there wasn't really much. On the 1 hour time frame, if I just head back here, there was this. So if I just mark this high on, which would have been a 15-minute high, I'm not gonna bother to replay it back, but this would have been a little 15-minute high. That would have looked something like that. Then obviously we've got this price action here, and this would have approached into that high. Obviously it's broken, closed out structure there. So there's not really much I can do on the 1 hour time frame. However, I might as well just replay it back to show you something. If I just go back, it won't let me. Let's go 15. If I just go back to there, let me just see if there was an entry in the 15-minute beforehand, which there was. Let me just zoom in and check. Yep, there was a high test there. So the high here isn't the best, okay? I misgauged that from the 1 hour. Usually that would have been a body close. The high isn't the best, hence why I'm not gonna entertain the entry. Okay, because there's not really a solid high. This is a wick. I normally like to look for more evident highs like this, which at that area we didn't get the entry, as you can see. This then trickled past to the outer of the structure, as you can see. There's no entry there. Had we have had a proper high, something like this over here, so push down, consolidation, stop at the highs there, you can see going forward, that would have been the entry as the high test with my stops just above that, right? So technically speaking, you could have got involved here, and then the entry would have been above that, which you would have got stopped out for. So calling this a 15 pip stop, just being super transparent there. Would I be surprised that this broke out and broke back in? Not necessarily, but you can't obviously just speculate all that beforehand and use that as a reason not to take the trade. It's a very important point, because what people do is they get too deep into speculation and think, well, guess what? Price broke out of the highs here before it broke back in. Same concept here on the lower time frame. This is actually a pattern that is very common in the markets for those who understand patterns in the market, that when you have a bigger pattern, you usually get a smaller one just beneath it, which if that does complete like this did, it usually has a pretty hard sell-off or an aggressive sell-off, which it did have an aggressive sell-off from there, it just didn't continue on. So it's the same pattern as here, over here, just in a smaller version of it, which is very, very important to notice. Very few people would notice that. So people get too deep into speculation thinking, oh, well, this broke out, so this must break out as well. And so for that reason, I'm not going to take the trade. Although there may have been a trade there. In this case, there wasn't, so I would have stayed out of the loss. But what I'm trying to say is that people get too deep into speculation. That's the big problem. Here's another entry I can see. Obviously, it won't let me put the trade on because I've set the date to be from December onwards, but I'm just demonstrating some entries to you, what that would look like. This obviously broke out, but it was very, very small on the 1 hour time frame. And we do have a small little high test there. It's not strong enough, right? So I'm not going to trade it based off the high test alone. I'll trade it based off this candle alone. So you can see there, if I protect my stops above this high over here, which would happen to be about, call it 35 pip stop, I would be at break even after this candle. That would have tagged me out of a break even. Let's also check on the 4 hour if there was anything. There was, okay. So on the 4 hour, I want to measure, so from here to here, which is structure point 1 to structure point 2. Why is that the case? As you can see, low 1, low 2. Let me just get that accurate. If I go over to the 4 hour time frame, this isn't broken out impulsively, which doesn't void my plan. We've had a full engulfing candle all the way back in. I can actually get in on a limit order, which would be around halfway up that candle. And my stops I can have above here for about 40 pips. Management would be on the 1 hour. Management strictly always on the 1 hour for me. Barring if it's a niche scenario where I've got to be a bit more aggressive with management, I might use the 15-minute or the 5-minute or a more micro time frame like those two. These are the only time frames that I trade, these 4 as executional time frames, including the 4 hour. So it's very rare scenarios that I'll actually do that. If I do that, it's in a scenario where I'm playing a small range and I want to get in, get out before price can turn around. Otherwise, I'm strictly using the 1 hour time frame, which is the reason I can stay into trades that get me out for 6, 7, 8, 9, 10 to 1 and beyond, where most people would get out for a 2 to 1 or a 1 to 1. Anyway, that would have triggered me in. Let's double check what time. So that candle would have opened at 5 a.m. Obviously the clock's gone an hour back, and it would have closed at 9 a.m. That would have been the 9 a.m. open, which triggered me in. So let's have a check on the 1 hour. It would have been around here that it would have triggered me in. Just having a look at it, probably on that candle. So because of that, I would now be at break even after this, because it would have triggered me in, like I said, as a limit order over around here. So by that point, I can't move to break even, right? This is already sold off. That's the 4 hour candle close. Then we've got the 9 a.m. open, 9, 10 a.m. around here. Then after this moved down and moved lower and broke structure on the left here with this candle, that's when I would have been at break even. So moving my stops accordingly. That's, by the way, it shows you the difference. Here was an hourly entry, which I would have walked away with the break even. But a higher time frame 4 hour entry would have kept me into the trade with a very similar entry area. But the entry changes, it's a limit order play, so it changes the whole landscape of my trade. That's the difference between a break even and a trade that you stay in for, let's see, a fair share of profit. And you'll see as I go through this how I'm going to manage these positions. Now you might be asking, well, how would you know whether to pick the 4 hour or 1 hour? Like I said, this is not a tutorial, I can make that a separate video. But there's a very simple reason as to why I would take the 4 hour. And I'll tell you very briefly in this short little clip here. The reason being is because the 4 hour entry is available. So I can't turn it down. The 4 hour entry is available. I'm going to play the 4 hour wait here in accordance with the higher time frame. Look at the retest at the back end of the low as well, just to note. In accordance with the higher time frame, if I've got the option of the 4 hour entry, I'll take it. If you've got a safer option to go buy in the market, don't turn the option down. Okay. Anyway, so that's a very simple, brief reason as to why I'd opt for the 4 hour here anyway. Management wise, let's go back to it very quick. Don't want to waste time, I want to get on with it now. This would have sold off. Around here is where I would have kept the profit locked in, and the reason being is because if I'm looking left, we've got 1 low and we've got 2 lows. As we've broken within that range, I want to see what price does. So I'll take this off because we've broken past that low. It starts to stall around here, I lock my profits in, not too aggressively but not too leniently to give price that much room where I sacrifice so much profit. I'm happy with 4% here. As it starts to consolidate like so, I'll keep my stops locked in above that structure, assuming that price is going to reach these areas to sell off, worst case scenario. If not, and it takes me out, that's invalidated anyway. So I'll keep my stops locked in there. Why not 4%? It then sells off. Where does it sell off to? Down over to here. Let me take this off. Let me take that off. Now I know, okay, This is forming a separate structure. This is a trade that actually a lot of traders took last year. I remember this trade. This is from summer last year, September. As this starts to sell off, now I'm locking in loads of profit, because as this breaks structure, I'm going to lock in where I would keep my stops as if I'd entered over here. Okay, and this is actually a potential scaling position as well. Another one I can mark on. Take a look. So there's the 1 hour entry available here with this 1 hour candle. I believe there was also a 15-minute entry available as well, which is really great because the way that we trade is super dynamic, but we can't just guess what timeframes to use. There's a science as to why we use certain timeframes, and there's a certain reason always as to why we pick a certain time frame. So you can even get the 15-minute here. You can get 1 entry, you can get 2 entries. Let's assume we took the 1 hour. I'm going to show you entries today that don't require much lower time frame usage, because a lot of people nowadays, they're just absolutely going battle royale on 1 minute, 2 minutes, and there's too much noise on those time frames, even if you know what you're doing. So if I have a look here, stops would be around 30 pips. I don't want to squeeze it. Hence my previous stops would be here. So I would execute that trade having locked in profit, like so 6.2. The number of profit locked in isn't really the problem. It's more so the room that I'm giving price. As that breaks lower over here on this trade, that would be at now break even. This would be now where my break even stops with my second trade. I'm never keeping more than 1% risk if I'm risking 1% per trade on that account, let's say, as my max exposure, which means at any given time, I'm only risking 1%. I'm not doubling up on this. I'm not leaving this risk open, right? And then thinking, oh, I'll put another risk on another trade. It doesn't work that way with a baby trade. I want to eliminate risk or lock in profit on my initial position, then scale into my next position. I'm not just going to leave risk open on the first trade and then add more risk on the second trade. I don't necessarily think that's effective, but each their own. As this starts to drop out over here, I'm looking left. Is there anything? Yes, there is. There's a low to the left here. Why is this low important? We've got a serious volume injection here. So price, the closer it's getting to those lows, the more I want to get out of that trade. All right, because at that point, it's been selling off for quite a while. So I'll be looking to lock in pretty aggressive around here on that trade and around this much on this trade over here. 2.4 plus 8.7. I don't know what the math is, but yeah, that would be what the trade would be in the end. That would have took me out. So if I just lock and hide both of these, I'm going to fast forward, right, because I'm going to end up showing you too many trades, and I actually want to use the feature and show you the feature. Look how brilliant the psychology is as well. Break at the high, break back in, continuation, drop. Honestly, it's so evident when you see it consistently. I've been trading this one method for coming up to 7 years in April. So I started trading this method in April 2018. And so when you've traded one method for that long, you've trained your eyes to see the market from one way. It's really interesting what you start to see. Let's anyway fast forward this. I'm going to put this to 10 speed. Keep an eye on the top as well for the day of the week. There are many trades in here as well. Many trades. There's even a long position over here. There's a little long position in there as well, which you could have taken. Got out of profit before those highs. Break of the high there. Little continuation inside there. There's quite a few trades. There's one met there. Just as I'm starting to see this. Sorry, I'm getting carried away. Right, it's too much opportunity at hand. And this is going into the better part of the final part of the year, where people normally think it's a poor time to trade, which is not actually entirely accurate. Have we hit a major area of value? Yes, we have. Take a look at this as well. If I go daily to show you what's happened. We've printed the first low. We've come in, we've missed again. And now we're starting to close that gap, which is really good. Broke the lows, fake rally to the upside, more of a Judas rally, because why was that the case? You can see the daily candle close like so, which is technically usually fine. It's just that we didn't follow through in the lower time frame with continuation. And we've come back down to fill that gap, which is showing me that this is actually a fake move to the upside. So price could be breaking the lows further, as you can see there. This is all, by the way, I don't remember this price action entirely. I remember some trades from here and there, but I'm doing this raw with you now. Is there anything else to the left? Okay, so I don't need these lows on anymore. There's these lows to the left over here. All right, what's going on? Okay, this could potentially be forming a continuation, so let me have a check. There's the top of the high, as you can see there. There's no trade there because we've left a gap. So I'll go 15, no continuation entries over here. 4 hour, not really much, too much of a gap there, so let me leave that alone. Okay, that could fill the gap, which it has done, but the retrace candle is too big, which means risk to reward is compromised, so there's no point in taking that. Is there any lower time frame continuation? Yes, it's pretty whack though. Yeah, that's not really a nice structure over there. That looks pretty complex, so I'm not going to trade that. No point in setting a limit order entry on this. 4 hour, however, you can actually get away with that. So I'm actually going to put this trade on. Let me just measure what 50% of this is. Right, so roughly around there. Now, can I keep my stops above the highs? There's no way I can protect them on the lower time frame, so let me forget that. Let me now check if I keep a 54, 55 pip stop, is the risk to reward worth it? We've got 2.5 to the bottom of the structure. We've got about a 4% trade to the bottom of that range. I think that's pretty worth it. It's fine. It's an average trade. It's one that you could see as a drawdown recovery trade. If you're like 2-3% down, it's a safe entry on the 4 hour. Your stops are protected. The only thing I don't like about this is that we have this above here in structure. We are pretty far down in terms of the overall run that you can see. That's something very important to consider that people forget. So the chances of price, especially when you have a flatter correction like this, price pulling out and then pulling back in, are actually higher. So I want to make my chances of staying into the trade as high as possible. The first way I can do that is making sure I get a safe entry time frame, which is the 4 hours, the safest intraday entry time frame there is. Secondly, by not choking my stops, number 2. That's it. Otherwise, I get an insurance entry, which would be a lower time frame continuation here, which from the looks of it, it doesn't look like we're going to get yet. So if I can afford this risk and I've lowered it the best I possibly can, I'm putting myself in a position where if I take a loss, it's a good loss. That's how you should be thinking. If you take losses, they have to be good losses. Let's see if it lets me set this entry. Let me take that off. Let me also double check if the entry is set on accurate. So move it down to here. It should now put me in a position if I just readjust this. Right, anyway, I don't know why it's not executed. It's probably because it's a small price difference, but in real life that would execute. Nonetheless, how would I manage this trade? So it triggered me in, presuming, okay, if we go to the 1 hour time frame, we've moved away. So I'd be at break even over here. And that would be a very quick break even, as you can see. Let's take that off, ignore that. Let's try get another trade in the meantime. I know we're getting quite long with this video. I don't want to keep it too long. Doesn't sell off, doesn't really do much. Let's also see going up to here what it does. I want to see how it reacts to these lows. From memory, this rocketed from here. Okay, 1 hour time frame. There you go. We've had price first of all form this, which is broken out of. It's retested. Great, it's done that. These little inflection points on the left, it's shown no reactions, i.e. no volume, sell volume there. The next major high is up here. So if anything, the fact that it's formed this continuation, let me just rewind that again. The fact that it's formed this continuation over here is the first sign that you need that this is clearly not responding to any sell volume. The only thing, like I said, I don't like is it's moved off pretty aggressively. Normally with stuff like this, especially with this little point beneath it, this would dip out and dip back in. But like I said, how can I, knowing that, get the safest entry possible? Because there's a fine line between an outright shit entry that no matter how safe you try to play it, no matter what time frame you try to use, it's just a crap entry, versus an entry that you can actually save. In this one, I know, okay, we've had pretty impulsive move from top to bottom, but we've started to slow down. Look how we've started to slow down over here. This is the H1. 1, 2, 3, that's 3 rejections, that's 3 failed attempts to break. We're going into London session at 6 AM UK time. We're going into London. It's a perfect time to take this trade. Okay, so 1 hour here is all I need. Is the 4 hour available? Not really as of yet because it's not closed. So I'm gonna play the 1 hour. Let's have a look at how that looks. Let me just set the order on this. This would be let's do a market order. There's no need for a limit order here. In fact, let me gauge. There might be. Risk to reward up to here is about 3.5. If I get it tight, about 4.17. With a limit order, if I get involved, okay, there's quite a big difference. Let me do limit, 5.7. Do a buy limit, 334, so that's right, 523. Position size, entry price. Let me reset that, roughly about there. Right, hopefully this actually works. Right, so I've refreshed it. Let's see if this works. I genuinely am so confused because this always works, but I want to keep these videos super raw. So finally, right, let's see this work. So I'll give it a second. That's triggered me in. Let's have a look at management. So if I just slow this down to say 1 times, I'd be at break even now. So in a real life scenario, I'd be just past break even there. Take it one bit at a time. Let's do it by the minute, so it's a bit more realistic. Here, what profit am I running? So let me have a check. I'm running roughly about 2.3. There's no real reason to lock in too aggressively right now. 1% profit would be about here. So I'll tell you what, I'll lock in 1% profit over there, like so, which would mean my stop losses are about here. Okay, let's move that back up again. Now, why am I setting take profit around here? This is more of a range play, like I said, so I'm setting it about 90% of the range roughly, just to be on the safe side. Let's play it ahead. Okay, so I'm locking in a bit more, just beneath this consolidation on the left. Not going to be too aggressive with it. Trailing a little bit more. Just want to see how this responds to these highs over here. Also, you know, when you're seeing this price action, it's very important to ask yourself, how would you be feeling in the moment if you've come off the back of 3 losses, 4 losses? It's very hard to visualize, but just exercise your mind to visualize it. How would you be feeling? And if you don't know that, don't you think you should be tracking your thoughts so you know what your behavior is like? This is why people say this bullshit of, oh, just focus on your psychology later. No, you don't need to focus on it later. You need to focus on it today, right now, with urgency. Because if you don't have a clue or a track record, people are so obsessed with track records, but they don't even keep one of themselves, as to how you think and how you behave, let's say off the back of 3 losses, or if you've missed a few trades, if you've underperformed, if there's a life situation that you're dealing with. If you don't know how naturally that's going to affect your thinking, i.e. your decision making, then the trades that you take, what are you doing? Daydreaming, fantasizing with this backtesting and data collection. You need to collect data on yourself as well. That's just as important, because if you don't do that, you can't sit here with me and when I ask you, how would you be feeling through this? You won't have a clue. Listen, the link's in the description, use it. Right, go there, go buy the Rewired program. It's a performance program that's gonna really tremendously help you. Like I said, 97-98% of our traders have got it and they've utilized it. And there's a reason that I'm recommending it to you so much in practically every single video, because it works. It literally works. So, backtesting, obviously you can only simulate your emotions so much, but if you have some kind of track record as to how you think, you can put yourself in these scenarios and think, right, 4 losses, come off the back end of that, how would I naturally feel? Missed trades, how would I be feeling when price is going up and down? Would you prematurely close that trade? You know, even if your plan says no. People avoid the plans a lot. You can have the most mechanical, rule-based system in the entire planet, but trust me, if you're an emotional shit show, no backtesting, no data collection, no data in the world is going to help you. And that's what people with brains fail to realize. Anyway, so that trade took me out, nothing more I could have done. So that took me out around here for roughly about 2.5, something along those lines. There's no way I would have held through that. There's no point. Is there anything there on the 15? Let's have a check.